Hi everybody, welcome to the Middle Class Investor. This is Seth Martin, your host, and today is September 7th. And let's see, let me go to this chart. Last week we were talking about this sell-off. We were talking about this being in support under this low. And we went ahead and drew this other support area in, and we talked about how the odds favor that the trend would continue as it did. But we also talked about how this line right here is the upper trend line of that rising wedge, and that it was going to continue to be important. And we broke through the line again, which is very unusual, I think, although one of the things I alluded to last time is that this pattern is a very large pattern. Let's look at a 10-year. So going back to 09, and so if you look at it kind of with that perspective, these I don't know if you'd call these breakouts. These are monthly bars now. If you look at it on a weekly, some of you technical analysis guys out there, I don't know, we could argue about it. But anyway, we bottom line is we breached the upper trend line again, which I say is unusual. Usually once you get a move like this, you might retest the trend line, but you don't usually break through it. So I'm not sure what to say about that, but I think that the trend is up, and if you're in mutual funds, long mutual funds, long index funds, just long the market in general, then you're probably good to go and stay that way. We'll probably get a little pullback this week, but I suspect we'll pull back and then just bounce up. The next area of resistance is kind of around here in that 2030 area. We can draw it on there. Let's see, let's go back to this point right here, and we'll put it in kind of in this area right here. So we'll look for that zone. I think it's possible that we pull back first and travel up into that zone. We're probably not going to go much higher than this zone before we pull back again. Question then becomes, do we pull back, through the bottom channel? Because as we've been going here, these are getting closer and closer together. So at some point, a pullback is going to bring us below this channel or this lower trend line, and then we have probably some decisions to make. Let me back up a little further. Yeah, see, it's kind of, most of the price action is in the upper portion of this rising wedge, and I think that speaks to the overall bullishness in the market. There's a lot of bullishness. In fact, there's only about 15% bears out there, which is really interesting, because usually when you get really low numbers like that on the investors' intelligence index like that, it usually means we're coming in for a pretty good pullback. So we'll continue to watch stuff like that. I don't subscribe to investors' intelligence, but you hear people quoting it all the time. So the interesting thing about the market is there just doesn't seem to be anybody that thinks it's going to go down. And usually when that happens, it goes down, and everybody goes, well, we were due for a pullback, but then nobody was calling for it, So we'll just have to wait and see kind of what's going on. There's really not anything to do. There's been a lot of action in the euro, as you can see. We broke through. The euro is experiencing some serious selling here, and you can see that our support line here gave way. And so what we'll look for is we'll look for the euro to have another chance to stop down here in this 127 area. I'm thinking that's probably going to hold at least for a little while, longer than this one did. Each one of these is a week, so let's zoom in here a little bit. I mean, you can see here they just gapped and blew right through this level of support. So this is a lot of movement on the euro. Draghi came out, and I don't listen to these things a whole lot, but it basically sounds like to me that they're going to try to do some QE. Now, I don't know how the euro does QE because they have all these different countries, and I'm sure some of them, the stronger economies, probably object to that, and the weaker economies probably are okay with it. So I don't know how all that gets shaken out. We talked last week about maybe the euro eventually heading down toward some parity at one to one with the U.S. dollar. So we'll keep looking for that to see if that happens. I mean, that's a forecast, and I don't know that's worth all that much. You certainly wouldn't trade on it. I think you just trade what you see. Let's look at the interest rate market. This zone here continues to hold, which follows with our current expectation, which is this trend, this price action into this low here for 2012, about mid 2012, and then this bounce. The thesis in the middle class investor room here is that this is likely to be the first move off the low. And if this is the first move off the low, and this is the first pullback after the first move, then the next move is likely to be very, very strong. Now, we drew this down here, but the likelihood is that this will hold. If I think we did a Fibonacci retracement. Fibonacci is just it's a tool on a lot of these trading platforms, and of course I'm using it wrong all of a sudden. So let me why am I not knowing how to do this? So what we do is we measure this swing from the low to the high, and then this number right here is this 38%. Is a pretty common number in a pullback. Another common one is this 62% right here. The reality is all these, or any of these, could be kind of hidden support areas, but commonly in a initial pullback, and this might stop here, go up a little bit, and then come down a little further. I mean, that could happen too. So I think interest rates are going to go a little lower. I don't think this is the low, because I think probably what will happen is, we'll get a little rally here when the interest rates normally they go opposite of the market. So as the market's going down, interest rate, money floods into the bond market and interest rates go down. So meaning bonds go up. So I'm looking for some sort of, if that wedge breaks, I'm looking for some sort of continuation of falling in the interest rate market. But I don't think, and we could get down to this level of support, but I don't think that we're going to take out this low. I think this low is pretty significant. I think the next likely place is, well, let's just draw it in here. I think the next likely location for a pullback is in this zone right here. And then if we, it could look something like bounce up and then come down into this area. And then I think if it breaks this, it's likely to come down to here. And if it comes down here, I think it's probably likely to make a new low. So we'll just have to watch it. Certainly, as long as it's going in this direction down, if you're in bond funds, you're doing okay. There is a lot of risk in bond funds, though, because if this is the first move off the bottom and this is the first pullback, this next move is going to be pretty significant. It's going to be something really fast like this, and you're going to lose a lot of money in bond funds if you now right here you made a lot of money in bond funds right through this move, but you could have a move tacked onto that could look like this, and it would be very significant. So just watch out for that. Unfortunately, there's not much you can. I mean, it's not a guess, but I think the thesis is that 1.4% is a very low interest rate. The Fed seems to be, bent on raising the overnight rate, which usually means that all these other rates will follow. Incidentally, the Fed, I don't know if you know this or not, but the Fed does not manage this 10-year rate. This 10-year rate is controlled by the buying and selling of bonds in the 10-year Treasury. So maybe that's something we'll talk about another time, but a lot of people think that the Fed is lowering this, and this 10-year Treasury is what your home mortgage is based on. In fact, it's the basis for a lot of different consumer loans, namely the home mortgage. But a lot of people think the Fed is controlling this rate, and that's just not what's happening. So, but we could talk about that another time. Let's look at volatility. Volatility is something we've talked about. I think it's something we should be focused on. We had a spike here at the end of August, or excuse me, at the end of July, beginning of August, and then we pull right back down. But notice we're not pulling down to the lows, so volatility might be starting to creep up. And of course, what happens is volatility creeps up, and then it shoots way up. So we'll continue to watch that. Right now, we've got to let's kind of connect these right here. We got some support on this increasing trend line, so we'll continue to focus on that. Let's look at the Dow. Excuse me, the Dow. If you notice, the S&P made a new high. See here, the S&P made a new high from this July 24th high. Came down and made a new high on September 4th. But if you look at the Dow's old high was on July 17th, came down, and let's see, what's the new high? It's one of these days. It's either this day, which is August 26th, or this day, September 4th. Let's see which one of those is higher. 17,161.55, 17,153.80. So this day right here is the high day, but it is not higher, I don't think, than this one. 17,151.56, 55. So basically, by one tick, that's interesting. By one tick, this day right here, let me highlight it. This day right, well, messed that up. Sorry about that. Now I can't remove it. It'll be this day that's in between these two bars. That day right there is lower than, by one tick, than this day right here. Isn't that interesting? So, but I'd look for that to get taken out, the Dow make a new high, and get in line with the S&P 500. But this is looking somewhat terminal to me. I mean, it's a little bit of a feel thing, because if you look at a lot of charts, and I know some of you guys do, you kind of start to get a feel for the way the market looks, and how it looks like it, or about when it looks like it might pull back. So I'm thinking, the Dow will probably get up here around 17,250, 17,220, and then pull back, at least initially, into this 16,880 area, maybe a little higher, and then we'll have to see what happens. Let's go look at gold real quick. Gold continues to trade in this range. I think I've showed you before. This is a consolidation range. Now right now we're on a daily chart, but I've shown you before on a weekly where the market came down really hard and then you've had this consolidation happening. And it looks like to me this is just about over. It could come back up into this area, into this 13,340, and then come down. But I think it's going to make a lower low. I think you'll see gold below this low, maybe about $100 or so. And so we'll just keep looking for that. Now, one of our viewers is in the UK and is telling me that I can look at the FTSE. I've tried this already, and it works better on a weekly chart. So let's look at a weekly. Just look at the FTSE for grins and giggles on a weekly here. The FTSE to me looks like it's ahead of the U.S. markets in that this was a pretty strong move down, and this looks fairly corrective back up. So I think the next move for the FTSE is probably lower. I don't think you'll see a new high in the FTSE, not in the near term anyway. And I think you'll see this come down and make a low somewhere into this area, maybe 580, so 100 points lower than what it is. So let me know what you think of that. I'm not sure what your forecast for the FTSE is, but just my gut look here, this is a pretty strong move down. This looks very corrective back up. When things get corrective, you get a lot of overlapping action. So to me, this looks very corrective back up, which means if this is the first move down and this is the first correction into the first move, this move could be significant, and that's why I think you might see the FTSE make its way down in here to this 550 area. So, or at least this 590 area, 595, 590. So that's what I see on the FTSE. So give me your feedback on that. Let me know what you think on that. In general, I just think the FTSE's ahead of the U.S. market. I think what I see here is this is moving faster. This has already begun to sell off, whereas the U.S. market seems to be hanging in there. I don't really know why. Certainly, I just closed my chart. I don't know why the FTSE would be hanging in there. But, well, since I have this up, let me bring the YouTube channel up to promote that. And, you guys, send a link to your friends or something. I know there's other people out there that want to know about how to manage their money, and they don't. I'm not saying you should trust me implicitly, but I know a lot of people don't trust their brokers, they hear everybody saying, oh, just, everything's cliche, right? Oh, just put your money in and you're young and you're going to do fine. Nobody can time the market. Just hang in there kind of thing. So, well, that's, at my job, we always talk about how hope is not a strategy. And that's kind of a hope strategy. I mean, that's like, well, I'm going to put my money in there and let's hope that, the market continues to go up. Well, you work hard for this money. It's hard to save money, and it just really doesn't make a lot of sense to just put it somewhere like this and just forget about it. Go on about your day as if that's the best way to manage it. So send your friends a link to the Middle Class Investor and get them involved, and let's see if we can get this thing spread around a little bit. As always, you can comment. When you watch the video, you can comment on it, you can like it, you can share it. There's a lot of different things you can do. Now, some of that stuff, like if you share it or if you subscribe to it, you might have to have a YouTube account. So it's pretty easy, though. Just sign up for YouTube and get a YouTube account. Anyway, that's it for this week, everybody. Thanks for joining again. Thanks for you guys coming out there and looking each week. And just continue to promote it. Send it to your family and friends, and maybe we can get, right now we only got 13 views, so maybe that's not very many. I suspect if the market starts selling off a little harder, we'll probably get some more views, and I appreciate you guys out there who have been giving me suggestions about how to get more views. I need to get a little bit better at that and maybe get a little bit more entertaining in my talk here. It's probably too dry for some people out there. So anyway, thanks again, everybody, for coming in this week, and we will talk to you next week. Have a great second week of September, everybody. Take care. Bye-bye.